10 excellent growth stocks you can buy now in February and hold for 2024 and beyond, most likely. So in this video, I'll share with you what my top 10 growth stocks are to buy right now. I'll also share with you how these growth stocks have performed so far this year, because this is an update to my list of 10 growth stocks that I published in January. I am making one big change to this list, so you're not going to want to miss that. And then I'm going to show you the performance of my list of top stocks to buy, top growth stocks to buy, and compare it to the S&P 500 and share with you how my stocks have performed against the S&P 500. I'll give you a hint right now. They have outperformed the S&P 500. So let's jump in. Let's take a look at these stocks. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so my list of 10 growth stocks to buy to start the year consisted of Zoom Video Communications, NVIDIA, which is performing phenomenally, Fortinet, the cybersecurity company, Amazon, social media company Snap, Fiverr International, which is trading at a remarkably cheap forward price to earnings of 9.249. You rarely get growth stocks at these valuations, but with Fiverr and PayPal trading at a forward price to earnings of 10.09, you're getting these growth stocks at value stock valuations, which is attractive for me. Salesforce trading at a forward price to earnings of 25, also not too expensive. Uber Technologies at a forward price to earnings of 25.78, and Alphabet at a forward price to earnings of 19.65. So these were my 10 growth stocks to buy to start the year. I'm making one change to this list. I'm taking one stock out and putting another stock in. So you're going to want to see that. But before we see that change, let's look at the performance of my stocks in 2024 so far as of this recording on Friday, January 26th. So here's how they've performed. You've got 1, 2, 3 out of the 10 that are negative for the year so far, and 7 out of the 10 that are positive. What's more, you've got the top return at 22.98%, way better than the negative of negative 5.55%. So your high and the low, the high is higher than the low is lower. I always like to see that. Secondly, you've got 12.78 for Fortinet. That's a solid return to be sure. 8.86% for Alphabet, 6.49% Salesforce. The negatives include negative 5.55% for Zoom Video. You've got negative 3.07% for Snap, and you've got negative 2.09% for Fiverr. One of the ones that's going to be removed is one of the negatives, and you're going to see that in this next slide here. And what I'm removing is Zoom Video Communications, no longer in my list of top 10 growth stocks to buy. Although I still like Zoom Video stock, I just like Chewy a little bit better than Zoom Video. Chewy now enters my list of top growth stocks to buy. Chewy stock is also down to start the year. It's down more than Zoom Video. I like the valuation of this company. I like the management of this company. I think they've done an excellent job both going into and coming out of the pandemic, where its business experienced wide fluctuations. I think management did a good job dealing with those fluctuations in its business. It's not an easy thing to do. Very few companies handled the pandemic well, both on the upside and on the downside. And I think Chewy was one of those few companies that did a good job managing the business, the ups and downs, the wild fluctuations, the unprecedented circumstances. I think they did a good job during that pandemic, and I give credit to management. And I like to own companies with good management teams that I perceive making good, prudent decisions, and I can trust them with my capital. So Chewy is one of the companies that's now in my list of top growth stocks to buy. But let's look at how they've performed so far and compare it against the S&P 500, which so far year to date has delivered 2.48% return. The S&P 500 index, 2.48% return. So let's look at how my stocks have performed against the S&P 500. All right, so here we have my 10 stocks listed, and the average return for my 10 stocks so far year to date, 5.238%, way ahead of the S&P 500 of 2.48%. If I was to annualize this return so far year to date for these growth stocks, I would get a 84.53% annualized rate of return. And you might be saying, wait a minute, how do you get 84% from 5% when you annualize it? Well, and you might be thinking, don't you just multiply by 12 and it'll be 60%? The answer is no. When you're looking at rates of return, you want to factor in compounding. So instead of multiplying by 12, you're taking it to the power of 12, which gives you the 84.53% instead of the 62% if you were to just simply multiply it by 12. But I did the same calculation for the S&P 500 and annualized its rate of return. It would deliver 34.17%. Also, that would be a phenomenal rate of return that investors should be thrilled with. If I was invested in the S&P 500 index, I would be thrilled with a 34.17% rate of return. I would be more happy, of course, with my growth stocks at 84.53% return. Now, compared to the S&P 500 so far year to date with 5.238% compared to 2.48%, I have outperformed the S&P 500 by 111%, more than double the rate of return of the S&P 500 was the rate of return of my top 10 growth stocks. Now, I will say that this is unrealistic, meaning it's unrealistic to expect these kinds of returns for the rest of the year or for any extended duration of time. This is just a fortunate turn of events that led to my growth stocks outperforming the S&P 500 by this magnitude, right? I'm not going to deliver this kind of performance likely all year, maybe all year long. That would be, again, it would be a fortunate turn of events, but I'm not going to deliver this kind of performance over a 3-year, 5-year, or 10-year period. If I could have done that, or if I do that, I'll probably be making billions, managing billions of dollars on Wall Street, right? I'm not going to be on YouTube making videos. That kind of outperformance is unprecedented. Okay, so let's put this in perspective. Let's understand, yes, it's a nice start to the year. It's an excellent outperformance, but let's not expect this kind of rate of return for the rest of the year or for any long-term duration. This is just a good start. Okay, so I'm happy with the rate of return so far of my top 10 growth stocks. I'm making that one change, adding Chewy in, taking Zoom video out. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.